Hello and welcome. Good afternoon. You're watching Market Fatafat on ET now with me, Sneha, and with me as always is Ankita Saxena. Now, this is a show where we'll be taking you through all the big buzzers in today's trade, tell you why they have been lapping up all the attention on the street today. We'll also be bringing in a technical expert and giving you a technical check on some of the stocks. But before we do that, let's take a look at what the markets are up to. And Ankita, well, it's a deep shade of red coming in. You have the benchmarks, broader market, everything is declining. Mid-cap index is down more than 1,000 points. Tell us a little bit more about the market.
Absolutely, Sneha. Deep gashes coming in on the market. In fact, we started on the back foot since morning. Nifty, we started out below the 23,000, 800 levels. In fact, we started out, on hitting a 4-month intraday low for the Nifty. And since then, there has been no respite. We have actually slipped below 23,700, and only 4 out of all the 50 Nifty companies are trading in the green. In fact, just 4 companies, NTPC, Trent, Tata Motors and Britannia are trading in the green, and rest all are trading in the red. Let's look at Nifty Bank also. One-way decline coming in on Nifty Bank as well. One-way decline in Nifty Bank. In fact, today is the last weekly option expiry for Nifty Bank because RBI rules are going to kick in, and now going ahead we will have just one weekly expiry for Nifty Bank in a month. So the weekly, it's the last day, the party is over for all the FNO traders as far as Nifty Bank option expiry is concerned. But also let's look at the other broader markets. The broader markets also trading with deeper cuts. In fact, they're underperforming the benchmark indices. Sectorally, all the sectors are trading in the red. In fact, sectorally, Nifty Metal, Nifty Realty are really taking it on the chin. Nifty Realty, names like Prestige, Lodha, Brigade, Raymond, they're all trading with cuts of more than 3.5 to 4%. So largely a very negative day of trade coming in on the market today.
Absolutely, it's been a one-way downward trajectory for our markets today. But on that note, let's kickstart the show then. And welcome on board Sneha Seth, Senior Analyst, Technical and Derivatives at Angel One. And from our research team today, we are being joined by Janai. Thank you so much to both of you and good afternoon. Welcome to the show. Let me start off the show with the first stock today that's deeply under pressure on the back of some poor quarterly numbers coming in for Q2, and that is Greaves Cotton. That stock is declining 10.5% as we speak. Now, let me run you through what the numbers look like. Revenue came in at 705 crores compared to 727 crore rupees, which is down almost 3% on a year-on-year basis. Net profit is coming at 3 crores versus a loss of 191 crores this time last year. So that's the only bit of positivity that we're seeing in these numbers. But nonetheless, it seems to be below the street's expectations. EBITDA has come in at 23 crore rupees versus 46 crores, which is down roughly 50% year-on-year. EBITDA margins have also shrunk quite a lot, coming in at just 3.3% compared to 6.3%, which is a downtick of 300 bips on a year-on-year basis. The company has also said that they're aiming to achieve the 15,000 crore, 2 billion revenue, in fact, by 2030 through a blend of organic growth and strategic acquisitions. We also spoke with the management just a while back, and they say that the balance sheet continues to be strong, and they expect the second half of FY25 to be better than what the Q2 has been for the company. So that's the outlook coming in. But well, yes, weak set of numbers, stock immensely under pressure.
All right, moving on to another stock that is reeling under pressure. In fact, the entire Nifty auto pack is, reeling under a lot of selling pressure right now. And Eicher Motor, an earnings candidate, Nifty 50 earnings candidate, is likely to report its Q2 results. Let's look at what we are expecting then. As far as the revenue are concerned, we are expecting an uptick of 7% in revenue on a year-on-year basis and an uptick of 1% on a sequential basis. We're also expecting the PAT to come in at, come up 2% on a year-on-year basis, but on a sequential basis, we're expecting a decline of 6% on a quarter-on-quarter basis. The EBITDA is expected to come in at, see an uptick of 5% on a year-on-year basis, but again, sequentially, it is likely to see a decline of 2%. So that's how we are, looking at the results for Eicher Motors, which will report its results soon. But Q2 provisional volume data, if you see, the overall re-volume has declined 1% on a year-on-year basis. The domestic volumes have declined 2% on a year-on-year basis, and the export volumes are the only ones that have grown 11% on a year-on-year basis. We are expecting revenue growth led by increase in ASP, better product mix and higher realization to aid the margin. The margin is partly offset by higher ad spends due to multiple launches for the company, and they expect the re-margins to largely remain stable on a sequential basis at 28%, and the VECV margins is also likely to remain flat on a quarter-on-quarter basis.
Okay, so that's not the stock in pressure today, Eicher Motors. But Sneha, let's get a technical check in on DLF then. That's the stock you've picked out for us. Last 1 week, 1 month, 6 months, only negative returns coming in for this stock. And the real estate space, no doubt, has been in pressure. Even today, it's the big sectoral loser. In fact, the most losing sector on the index today. Tell us what your view is on DLF going ahead. Time for the stock to reverse and give some positive returns now.
See, if you look at the chart structure, I believe we have seen some profit taking, and the previous swing low, which was placed around 765, that has also been breached this week. So, looking at the overall chart structure, I think we may see further selling pressure towards 720, 710. So, I believe if someone wants to go out and long, they should be watching at those levels to take a fresh long. But as of now, looking at the chart structure and the recent selling pressure, I believe we may see some further pain in this counter. So if anyone is, holding any long position, should exit, and someone who wants to go ahead and long this counter should be looking at the levels around 720, 710.
All right, that's DLF on the charts. But Janay, you picked out the new kid on the block, Swiggy, that's IPO today, and also Zomato. Tell us, why have you picked out these two counters together?
Well, definitely, firstly talking about Swiggy, it was anticipated that there would be below listing, the listing would be below the upper band price, but however the company did list with a premium of about 7.5%. We also have a note by JM Financial, who have initiated a buy rating on Swiggy with the target price of 470 with the estimation of March 26 EPS. Now what they say is that Indian food delivery market should expand at a CAGR of 20% for coming few years. Also, Instamart is an essentially play on a broader retail market of India, and it has an immense potential to grow and expand going further. Also, the recent corrective steps taken by the company could help overcome the execution challenges for the company in the past, and they believe that Swiggy's recent execution issues may be a thing of the past and it will improve now going forward. We also have a note by Zomato, who have maintained underperform but have hiked the target price for Zomato to 130. Now what they believe is that the hyper growth meets hyper competition. They've raised the target price to 130 on the basis of lower discount rate assumption for Zomato.
Okay, Janay, thanks for taking us through that. While that's what brokerages are making of the competition that we've seen between Swiggy and Zomato, earlier in the day, we also caught up with Karan Taurani, Senior VP at Elara Securities. Now, he believes that Swiggy will grow faster versus Zomato in the food business space. He also sees a 20% upside for Swiggy from the current levels. He also shared with us the growth potential for the quick commerce business in the next 5 to 7 years. Let's go across and listen in to get a sense of where he is placing his bets when it comes to Swiggy versus Zomato in the food business going ahead.
The growth rates for Swiggy, because the scale is smaller, Swiggy should potentially grow at a higher pace versus Zomato in the food business side. I think this space has got a very huge target market in terms of total addressable market. The size can be extremely big as compared to the food market, which is about $8-10 billion today, will grow at 18-20% on a steady state. The quick commerce market can be extremely big. I mean, it's at about $4.5 billion today. There is a potential for this market to even breach $30-35 billion over the next 5 to 7 years. You have to ride Zomato for now, given the kind of track record and the good execution we have seen from Zomato's side. So net, I think in a best case scenario, this 60% gap can move to a 40%, which means that Swiggy will see a 20% upside from current levels.
All right, moving on to the next counter. Sneha, you picked out Havells for us. Now, Havells in the last 6 months has been in a consolidation mode. In fact, in the last 1 month, it has seen a lot of correction. Do you see this up move coming in now? Do you see the reversal coming in now?
Yes, if we look at the chart structure, we have seen correction. It was like more than, it is correcting from 2000 plus levels, now trading around 1600 zone. If you look at the weekly chart, it is very much close to the 89 EMA on the daily, on the weekly chart. So I believe that should be acting as a support. We have seen this counter rebounding previously even from this zone. So I believe someone who wants to take a contra bet can go ahead and long this counter, keeping a strict stop loss of around 15-17. And upside, any move above 1710, 1720 would be very interesting. So at this point in time, there is 200 points range for this counter. But in case of any move beyond 1720, that would be very interesting, and we may see this counter heading at least towards 1815, 1870. That is the level which one can look for. So I believe if someone wants to go ahead and long this counter, keep a strict stop loss of around 1570 and go long.
Okay, so quite the bullish outlook coming in from Sneha on Havells India. But on that note, viewers, we'll slip into a very short break on this edition of Market Fatafat and keep it going with all the big buzzers just on the other side of the short break.
Welcome back. You're tuned into Market Fatafat, where we are taking you through all the stocks that are buzz in trade. Coming to you, Sneha, then on the charts, you've picked out Deepak Nitrite for us. Now, Deepak Nitrite has been on the radar for quite a few techies. Tell us what's exciting you about the stock. It has been in a long corrective phase, deep corrections in the last 1 month. Do you see a reversal on this now?
If we look at the chart structure, yes, we have seen this counter, correcting. In fact, there was support. The falling trend line support has been also breached, and now trading below the 200-day simple moving average on the daily chart. So, looking at the overall chart structure, I think if someone wants to go ahead and long, I believe, around 2,400, 2,420. That is the zone one should be looking at. So, looking at the overall correction below this trend line support, I believe we may see some further selling and thus this counter, and it can bring it towards 2,450, 2,430 level. So that's the zone if someone wants to go ahead and long. But yes, for a very short term, if someone wants to go ahead and long at this current levels, I would say that wait, that should be a proper strategy. And if someone wants to go ahead and long, I believe 1420, 1450 zone would be an ideal trading, ideal buying range for this count.
Okay, so that's the view coming in on Deepak Nitrite. Let's move on, talk about yet another big loser in today's trade, and that's PNB Housing, trading with cuts of more than 5% in today's trade. Now, as many as 2.5 crore shares that represent a 9.4% stake in PNB Housing Finance was sold in a block deal today, with Quality Investment Holdings being the likely seller. Of course, this is all just speculation. This is what the street is expecting to be, that Quality Investment Holding would be the likely seller in this block deal. However, we will have confirmed details and definite details on the seller post-market hours later in the evening today. Now, the deal, which saw shares being sold at a floor price of 943 rupees a piece, was worth a total of 2,300 crores. So that's the reason why PNB Housing is in focus on the back of one big block deal coming in. The stock under pressure, 5.2% lower is where the stock is.
All right, PNB Housing Finance reeling under pressure with cuts of more than 5%. But another counter that is in focus today is Britannia. Now, we did see Britannia report a weak set of Q2 numbers, but now Macquarie has come out and downgraded the counter to underperform from neutral, and they've cut the target price to 4,800 from an earlier 5,200 rupees. Now, of course, they say that the downgrade is to underperform on the growth risks that they see for the company. They've cut the FY 25, 26, and 27 EPS estimates to 11% each to factor in the Q2 miss. The EBITDA miss that came in, the miss was led by the weak gross margins and higher employee costs, but the palm oil prices have also been, and the further inflation have also weighed on the Q2 levels, and with no moderation in wheat and the cacao prices, the increase, the risk has also increased to the second half margin as well. Now, this along with the urban demand concerns is not adequately factored in as far as the current 56x FY 26 estimated EPS is concerned. On the back of that, there is downgrade coming on by Macquarie, but currently, Britannia has picked up from its lowest levels, trading with gains of 0.4%.
Okay, so that's why Britannia is in focus. But Sneha, you've picked out UPL on the charts, and it's a overall weak set of numbers that came in yesterday for the company. Tell us what you are spotting when it comes to the technical outlook on this chart, because if I take a look at what the stock has been up to on a year-to-date basis, it's a negative return of 13%. So tell us if you have some optimism on the stock going ahead, and what are the next levels to watch out for.
See, at present, looking at the overall chart structure, I'm not very optimistic. In fact, this counter is trading near one of the support zone. But I believe in case of any correction below today's low, that is around 505, 510, any closing below this, that won't be an interesting thing. In fact, because if you see last two sessions, whatever correction we have seen volumes even. So I believe we may see some further selling pressure in this counter. So in case someone wants to go ahead and short this counter, it is a good bet wherein you can expect a correction at least towards 480, 475 zone. So one can go short over here with a strict stop loss of around 530.
All right, moving on then, coming to you, Jinay, UPL is a name that you have picked out for us. Tell us, I beg your pardon, you picked out Ashoka Bitcoin for us. It's an earnings candidate. Tell us, what does the report card look like?
Well, definitely Ashoka Buildcon currently holding up to the gains of over 3.5% in today's weak side of markets. If you look at the numbers, if you look at revenue, it grew by 15.5% year-on-year basis. But if you look at other metrics such as net profit, it grew by 4.5%, 4.5 times actually, coming in at 457 crores this quarter versus 100 crores last quarter during same period. Also operationally, EBITDA grew by 65.8%, coming in at over 900 crores versus about 550 crores year-on-year basis. Also the margins saw a pretty big jump, coming in at 36.4% this quarter versus 25.3% last quarter during the same time. So there's an operationally very strong performance by Ashoka Buildcon. The company also reported that the current order book stands at 11,100 crores, about from which about 51% comes in from state government.
Okay, so that's the reason why Ashoka Buildcon is in focus today. Sneha, you picked out Metropolis Healthcare for us. Now, at least on the fundamentals, the profitability was good, but the stock is still under pressure. Last 1 year or YTD, the stock has given a modest 27-30% return. Tell us what's the outlook going ahead on the charts, and what would be the key levels to watch out for when it comes to Metropolis Healthcare?
Structure. Today it has already corrected nearly 5%, and looking at the overall chart structure, wherein this counter was continuously trading above the 89 EMA, and recently it has been consolidating at that zone only, but today we have seen it reaching the supports. And in fact, if you see, it is the first time after March 24 that we are seeing this counter correcting below the 89 EMA. And if we see a closing below this zone, which is 2070, 2080, if we see a closing below this, I believe we may see some further selling pressure coming in, which can bring this counter towards 1940, 1950 odd zone. So I believe someone wants to go ahead and short this counter. Look for tomorrow's level, and in case of any closing below this zone, that is around 2070, I believe it would be a short selling candidate, and for the target of at least 1940.
All right, speaking of Metropolis Health, giving us margin guidance, Surendran Chimokotil, who's the CEO of Metropolis Healthcare, he said that he is aiming to maintain it around 25 to 26%. Let's listen and understand how the lab expansion is affecting the margins.
We have given estimate of 25-26 band for this year, and then we are leaving those estimate in the last 2 quarters, and I don't see anything differently happening in the next 2 quarters as well. We will be definitely in this band of 25-26% for the rest of the year. And going forward, of course, see, we have this strategy of getting into 1,000 tons, and for getting into 1,000 tons, I think we need a certain number of labs, and those labs will be largely done by the end of this year. So once that's been done, then the focus is about how do we get more volumes, and how do we get more business from these 1,000 tons than expanding into beyond 1,000 tons. Hence, the lab expansion will go a little slow after this year. And hence, whenever we do lab expansion, it has got an impact of about 1.5% EBITDA, for the next 2 years. So once we slow down on the lab expansion from the next year onwards, you will start seeing that getting, translated to better margin for the coming years.
Okay, that's the word coming in from the management of Metropolis Healthcare. But on that note, we'll step into a very short break on Market Fatafat and keep it going with more stocks just on the other side when we return.
If you like this video, then like, share and subscribe to ET Now.